Hello, everyone, and welcome back. I'm sitting down with Brett, Trinity Financial. Brett, it's that time of the month again where we're kind of sitting down, discussing some major topics. And this, I guess I should say month, not just this week, we're talking late in life divorce.
Yes.
So, kind of researching into it myself, I saw the QDRO. What is a QDRO?
Well, it's called a QDRO. It's a qualified domestic relation order, but that's what is put into the divorce decree that splits the assets.
Okay.
So if it's not, I mean, the attorneys know how to draft it properly, but if it's not there and they try to split certain assets, usually qualified assets, it can cause a huge tax consequence. So QDRO is very important. That's what we use. We have to send that in with the divorce decree, and it has to have that properly worded QDRO in order to split the assets.
Absolutely, yeah, and you kind of just touched on it, but I was kind of wondering maybe the mistakes that could be made with something like that.
Taxation is the biggest one.
Okay.
Yep. When it comes to splitting the assets.
Yeah.
Yeah.
Interesting. Okay, so what are maybe the important financial details that kind of go along with, I always forget how to say it, a QDRO?
QDRO.
QDRO, okay.
So QDRO is only one part of the divorce. That's the final disposition of the funds, if you will.
Okay.
That says, dear mutual fund company or brokerage house, this is how you are to split the assets.
Okay.
So and it gives permission to avoid the taxation. So the spouse that's receiving the assets can still roll them into a qualified plan and not have to pay taxes on it.
Interesting. Okay, wait, so are there assets then that are taxable? Am I understanding that correctly?
Not in a divorce, they're usually
Okay.
not, because they can split it in kind, and again, the QDRO takes care of that.
Interesting. Okay, so what about, assets with, maybe are there growth potential?
So there's assets that have the growth potential, so that'd be any investable assets,
Right.
whether it's in the 401k, IRA, or just non-IRA assets, compared to fixed assets, which could be a home, a rental property, or so when you get into splitting of the assets, that's where things seem very cut and dry.
Mm-hmm.
If you got $1 million in investable assets and you got a $500,000 home, it's $1.5 million, split it $750,000. But that's not the case, because what I've seen is attorneys are fighting for their clients, right?
Absolutely.
So they'll try to get one spouse to take the home as part of that $750,000 and like $250,000 cash.
Okay.
Well, that's a very disproportionate, because that home is not a liquid asset.
Right, okay.
In other words, to get their assets out of there, they'd have to sell it.
Yes.
So they're going to have to pay a real estate commission off the top, so they lose 4 to 6%. And then they have to replace the living quarters. So just because real estate or fixed assets part of the overall portfolio doesn't mean that if you just split it down the middle, it's equal.
Right, and I know you had mentioned you'd kind of been seeing a lot of this, kind of lately, just working with Trinity Financial, if you kind of want to talk about what you've seen.
So again, as I told you before we started this, we were asked to talk about this.
Yeah.
We hold our workshops 2 every month for Social Security and Medicare, and we've seen an increase of divorcees. And unfortunately, statistically, it's women that are usually coming to these, because they're the ones that are most negatively impacted.
Yeah.
They haven't been involved in the finances, and now all of a sudden they're thrust into this world of, I have to manage the finances, I have to manage the income, and I have to figure out how I'm going to live.
Yeah.
So Social Security and Medicare is one part of it, but when it comes to planning for a divorce, there's a lot more particulars that we have to take a look at. We've helped put together some asset split proposals.
Okay. Yeah.
But it's not something that everybody knows how to work with. And I mean, the attorneys, their expertise is fighting for the legal rights of of their client, but ours is on the financial end of it. So we're finding that a lot of, again, statistically, women are being thrust into this new chapter of life that they don't want to be thrust into.
Yeah, absolutely. Well, you heard it here. You can go down to Trinity Financial, and if you are experiencing something like this, you can get help. They are there to help you. You can go visit them at their office, or you can just simply call 815-288-5800. That number for Trinity is on your screen, as well as the URL to their website. Well, Brett, again,
thanks, Alyssa.
as always, I always say, but it's great to have you on the show, and we will be right back after this break.